Welcome to today's market report.
US Treasury yields jumped and global equity markets tanked on Thursday, erasing the prior day's rally on Wall Street as investors worried aggressive central bank policies around the world to tamp down inflation will likely shackle growth. The rout on Wall Street snuffed a rally in European stocks, fears of a recession as the Bank of England suggested after it hiked rates earlier in London, quashed enthusiasm from Federal Reserve Chair Jerome Powell's remarks on Wednesday, when he said policymakers were not considering 75 basis point moves in the future. The 10-year Treasury notes rose 12.2 basis points to 3.037%, with inflation hedge gold rising after Powell emphasized risks to the economy from soaring inflation. Data shows the long end of the Treasury market has suffered the most deeply negative returns this year, going back to at least 1928. Markets will remain volatile until there is a clear picture of Fed rate policy and its trajectory later this year. Investors are worried that when we get to the back half of this year, the Fed is going to be so aggressive with raising interest rates that they're going to take the economy into a recession. There's no overall negative sentiment in the market. Worries about fast-paced rate increases at a time of China's COVID-19 lockdowns and the war in Ukraine to slow surging inflation have heavily weighed on stock markets this year. The Pan-European Stock 600 index fell 0.7% after opening 1.84% higher. MSCI shed 2.55% as it tumbled to lows last seen in March 2021. The global benchmark is down 14% year to date. The Dow Jones fell 3.12% and the S&P lost 3.56%. The Nasdaq shed 4.99%. The British pound plummeted on Thursday after the Bank of England hiked 25 basis points interest rates in a 6-3 split decision, spurring a 280 pip drop from nearly weekly highs from 126.30s to below 123.50.
This is today's market news. Thanks for listening. We'll see you next time.